Hello ladies and gentlemen, and welcome to Common Basic Things. My name is Cruz, and today I'm going to show you how to make passive income and how can you make money monthly on Robinhood. Almost 100% guaranteed by trading options, alright? Now before I do start, keep in mind that I am not a financial advisor nor a licensed professional. So if you'd like to invest in the stock market, please consult with one first. These videos are strictly for entertainment purposes only. Please do not try what I'm about to show you guys. And if you'd like to invest in the stock market, invest at your own risk. Secondly, please smash that like button and subscribe. Sometimes it takes me hours to make these videos, and so like any comment or like is appreciated. Now by default, Robinhood has trading options to disable for your own good so that you don't lose a lot of money. So now you're gonna have to enable it, and you're gonna do this, right? So you go into settings. Well, first you go into account right in your top right, depending on where you're at. You just go look for account, you click it, or you might see like a whole option right here, and it'll show it here. So you click it right. Once you're here, you go to settings. When you click into settings, you look to your left right here, and you go into options trading, and it'll take you right here. All you're gonna have to do is just enable it. In order to keep leveling up your account, you're just gonna have to do the basic things. Like for example, if you're just gonna wanna just buy any stock, just really buy, sell. It's just the common basic things that you start out with whenever you start in Robinhood. Now, once you do that, once you have everything done right and you have a level 3 account, you can do spreads, which is what I've been doing here recently, but usually people tend to start with the wheel concept. Now, let me show you an example. So let's see right over here. Let's choose one. Let's say AMD. Now let me say this, okay? In order for this to work, you need to choose a good stock, okay? And now a good stock is a stock that is continuously going up in value every single year, and it does not have a high volatility. So now, for example, as you can see here, AMD by the months, by the years, as you can see right here, it's been going up steadily. So this is not one. It takes dips, of course. Don't get me wrong. Every stock, but it's not as bad, and it's an uphill trend. It's not going down. As you can see, it's really a really great stock. So we're gonna go down to this trade options down right here, and we're gonna go click that right now. Once you're here, as you can see, there's a couple things you can do. You can buy calls, you can buy puts, you can sell calls, you can sell puts. We're not going to do anything with buy today. We're going to focus more on sell. And now the wheel concept starts usually when you start selling puts. And so what I'm going to show you here is how to start that, right? Now what you're going to want to look into when you're starting to sell puts and sell calls, you're going to want to start looking at and doing your own homework, of course. So you're going to want to know what the expiration date is, what the strike price is, the share price. This is the share price, and the premium. This is the premium, right? So now what this means is when you're selling a put, if the share price of the stock drops below the strike price, the one that you're selling it at, then you're gonna have to be forced to execute this. But whenever you're doing this, what you're gonna want to do is you're gonna choose one that's out of the money, one that you feel like is not gonna go below that price, right? So like I feel like if AMD right here, I feel like if AMD is not gonna go below $82 before September 4th, then I'll get this premium, right? So let me show you what this means. So now 82. So if by any chance AMD is below $82 on September 4th, on the expiration date, then I'm going to be forced to execute this. So I'm going to be forced to buy this share price at $82 strike price. And now keep in mind, one contract is 100 shares times the stock, right? So this is $8,200 basically. So when you're selling a put, if the stock doesn't drop below the strike price, then you're gonna be fine. You get the premium, which on this one is 85 cents per stock, which would come out to be around $85, as long as the stock price doesn't drop below the strike price, right? So I mean, it's a couple things that you could start doing, but the wheel concept would start you with this. Let's say once you do this contract, right? Let's continue and do one. All right. So the minimum credit right off the bat when you're selling a put, you're gonna get the premium, right? Which is 85 cents times 100, be $85. But they're gonna take $8,200 as collateral for selling this put right over here. Now that collateral, as long as it doesn't drop below that price, then they're gonna return it as once the contract expires worthless. But if by any chance it does drop below, let's say 80, and the contract's expiring on the 4th, and the strike price that you got this contract at is 82, then you're still gonna be forced to execute this, and you're gonna have to be forced to buy this at 82, even if the strike price is at 80. So you're gonna be losing. But this is where the concept of the wheel and why choosing a good stock, has to matter. All right, so you get the premium, right? Regardless, you always get the premium and keep the premium. Or if you pay it, depends on what you're doing, right? But once you do this, and by any chance if the stock price drops below the strike price, then what you're gonna want to do is you're gonna want to sell a call. Now, when you're selling a call, depending on which one you want to do, of course, if you don't want to keep the stock that you just purchased, then you can choose one that's in the money, so basically close to the price, so you wouldn't be getting as much. But let's say, for example, you want to just continue this wheel, and unfortunately, say one, let's say you want to keep doing this wheel, right? And let's say you choose this contract right over here. Now, when you're selling a call, you're gonna want to sell it for more, of course, and it's one contract, 100 times the share. So let's say, for example, we choose this one right over here. So now, if we're selling this, what this means is we're gonna get a credit of 162. All right, let's say that you did have to purchase those now let's say you did have to purchase those stocks, right? So now this is where the wheel concept comes in. So what you're going to want to do is you're going to want to go sell a call. So when you're selling a call, it's just a cycle, right? Continuous cycle. So let's say, for example, you choose this strike price right over here. You already have the stocks, might as well sell. So now what this means is, right, if you're selling this one, you're getting a premium of $162 basically, because 162 times 100 is 162. So you're getting a premium of $162 instantly. But not just that. And it's expiring the 4th, or let's choose a different date. It's the 25th, right? We just ended up buying the stocks. Now we're gonna sell it. All right. We choose right over here. All right, we choose this premium. We'd be getting this premium right over here, $453. 453 times 100, 453, right? And the by any chance, if the stock passes 87, then we'd be getting the difference of what we just earned, right? Plus the premiums. And if by any chance we do have to sell the stock, we just go back and we do it over again. So once you sold the calls, and let's say for example you got rid of the calls, of the stocks, right? Then you're gonna want to go back and you're gonna want to start selling puts again. So you're gonna go to like to October 18th, and let's say we want to sell this one right over here. This one right over here, right? Okay. So same thing, the wheel concept just keeps going over and over again, and it's just a continuous money. Okay, like it's very unlikely to lose unless, of course, you choose a bad stock, guys. And now that's why it's very unlikely to lose. But again, don't try this because you'll probably end up losing money. But let me show you how much money you can make by just selling. All right, so let's go to like a bigger stock, right? Not AMD. Let's say let's go to SPY. And now this over the years, it pays dividends. SPY does, right over here. It's not bad, honestly. If you had the stocks, if you want to invest in the stock market, dividends is our main goal here. We want to grow this account. Well, we want to try and blow it up, but also that is very high risk. So I mainly want to buy stocks that pay dividends, so that way I can, one day not have to work or be able to live off of it. Just an extra source of income, of course. But at the moment, my main goal is really to just make this account bigger. Just keep investing, reinvesting, trading. I'm learning every day, of course. I'm not. Don't get me wrong. I'm just here to show you what mistakes I make, so that way you don't make them as well. But yeah, like for example, let's say you want to trade, right? Trade SPY, and let's say you want to sell a covered call, because the only way you can sell calls is as long as you have 100 shares of that stock, you can sell a call. All right, so let's say you want to sell a call and you do have 100 shares of SPY. Now let me show you. Let's say not September, but let's go into 11th, right? Let me show you the premiums that they pay, just for having it, basically, and selling it, or showing that you'd pay. And if by any chance you don't want to sell it, choose some that are out of the money, of course, like a price that it would really have to shoot up very fast, and SPY is not the one to do it, not that fast. But let's say for example you want to do it like out of the money, like this one. You really don't want to sell it. Well, you're still getting $116, just selling it. And most likely, if by any chance you do sell it, you're gonna be gaining the difference. Also, it's 351 right now, right? This is 358, and let's say you did buy it at 351. This is 358. You'd be gaining what, $7 on top of the premium. That's not. If the way you look at it, if this is a continuous cycle, you really could be making 100% profit as long as you do it safely. Of course, don't risk too much. You don't want to choose stocks that have a high volatility. That's the worst mistake you could make. But yeah, besides that, I'm trying to really grow this account into a dividends account. Right now, like for example, I have 70 shares of AT&T. They also pay as dividends. I'm gonna start buying more Coca-Cola, right over here, KO. I'm gonna start buying more of that. They also pay a dividends. Apple, I did have some, but I ended up selling them because I wanted to do more trading. But they also pay dividends, not as much, but they do pay. There's a lot of great stocks that pay dividends, a lot of great stocks, and my main goal one day is, my main goal is really just to keep this concept of the wheel, right? Because it takes money to make money. You need money to make money. But then there's also different ways to make money with much less money, and that's what I'm trying to do here. I'm gonna grow this account and be able to grow it just much higher than it is right now. I haven't gotten it that big yet. I have lost when I first really started, but I am getting the hang of it, and there are a couple plays that I've made that haven't been too good. It's just I've gotten too cocky, I would say. Um, I wasn't sure on what I was doing, and of course that's a very big risk, right? You do have to keep a open mind. You have to be open minded. You can't freak out, when you see dips, when you see big dips like that. Of course, you want to just be consistent. Keep investing money. Every week. As much as you can, because money is losing value right now, and you don't want it to lose much value as you could potentially gain investing it. But besides that, Robinhood's a great app. It lets you invest in stocks 100% free, um, unless you get the gold version. Any day that is positive is a good day in our books. And remember, our purpose here investing in the stock market is to stop working for our money and letting our money work for us one day. Okay? All right. And so now that's all for you guys today. Again, thanks for watching. Let me know if you have any questions or anything down in the comments below, and I'll see you guys next time.